What's up, guys? So this video is going to be about interest rates. I know, once again, but we're going to talk about world interest rates, not just America. And, I want to talk a little bit about why cash is not trashed. And I'm tired of the dollar getting bashed. I'm tired of these guys and gals on YouTube hyping you up and shit saying, oh, if you have cash, it's trash. It's ridiculous. It's gone too far. And, ultimately, I want to tie everything back up to you, the regular person, just like me. We're working 9 to 5. We might have a couple things on the side, but we're still trying to work our way up into the 1%, hopefully one day, right? So without further ado, let's talk about Turkey. So you guys saw me posted on my story. Turkey just straight up said, the president said, hey, we're going to fire our central banker. It's like President Biden firing Jerome Powell because he raised interest rates, right? And Turkey and Russia, second world nations were raising interest rates at this environment. And you're like, whoa, well, why? And why did he fire him? Why would you do this? And why was he right? Why? I think he's right. It's my opinion. You can comment below. Let me know what you think. I could be wrong. You can convince me, but this is what I'm drawing from it, from my logical thinking. So let's get into it. So when you have interest rates low, obviously you're more inclined to take loans out to go do things, right? You want to go ahead and buy a house. You're going to go and start a business, a bar, a restaurant, whatever it is that you had in mind, because lower the interest rate is, the less risk you're taking, right? But, interest rates cannot remain low forever. Right? That's just not possible because we're doing this right now. So we kickstart the economy so that we can raise rates. That's the goal. That's the plan. And the reason why they can't remain this low forever is because we need yield. We need return because we have pension funds. We have retirement accounts tied up that need real returns, real percentage returns to be able to retire and go live, do the things they want to do. Eventually, what happens is you keep interest rates low for so long. The only way you can make everybody retire, everyone happy, is just keep printing more. And it gets to a certain point where it just doesn't make sense. And that's what I'm scared of. So what Turkey did is said, okay, we're gonna raise it. We're gonna try to get ahead of this thing. And here's why. They are a second world nation. They don't have a lot of cash. They don't have the luxury of being the world's reserve currency and being able to print out. So I don't want to misquote him, but here's my train of thinking. If I was the Federal Reserve Chair of Turkey, I'm saying, okay, you're in an environment where not only America's printing money, but everybody's printing money. There's money everywhere. Everyone has money. We want to attract that money because money wants to make money, right? Everybody wants to have the lowest amount of risk and get the most amount of return. Well, the lowest risk you could take is government bonds for the most part, and that return is usually low. So if you could offer a little bit more, you might get dollars to come in. You might get American dollars to come in. You might get the British pound to come in. You might get the euro to come in, the yen to come in, because you're like, oh wow, Turkey's offering 4%, 5% interest. I can't get that on the dollar here, and then I'll convert it later. Then when you have that capital being built up, and that demand being built up, and then once the rest of the world catches and cycles on and says, wow, we actually do have to jack up interest rate, it might take 2 or 3 years. You take the brunt of that impact because, maybe you don't have as many bars and restaurants open up in your economy. Maybe only the best businesses that are the most profitable get the loans, and they're the ones that get to survive. And actual capitalism works, and companies that should have died, die, right? So then, it sucks because maybe your population might be pissed because they can't get the house that they thought they could get, and then housing prices do come down, and you have this. But that's okay if you're thinking long term, because what happens is there's like a little reset. And then you start acting responsible. Interest rates at a fair price. And this is what the banker, the reserve chair might have been thinking, is like, okay, things are at a fair price and we're going to get ahead of inflation, right? Because that's how you cap inflation, is if you raise interest rates up, and everything becomes harder to borrow, you're not going to have, like a glass of wine go from freaking, $5 to $10 because everyone's getting money and it's a party, right? That party kind of stops. It kind of slows down, and it's like things get back to reality. Right? Then you cut back on Turkish people, got to cut back on spending. Maybe they don't open the bar, they got $40,000, $50,000 saved. They hold on to it. They make sure they make their payments on their house, right? They make sure balances and everything's booked. And at the same time, you have a bunch of currencies flooding into your country that's making your currency stronger, right? So then when the whole world goes into like a recession, depression, whatever, then you could flip the script. While everyone else is out there playing checkers, you're playing chess, right? Because then you could lower interest. Because if you kept interest rates at 6%, the way to kickstart the economy is drop that interest rate down to 5%, 4%, 3%, then get people borrowing, keep people going. Once the economy starts picking back up naturally, then you kind of raise it back up again. That was his view. That's kind of what Russia's doing. It's smart because you're going to have an influx of currencies coming in, and it strengthens you and it prepares you for the future. But in the short term, no president wants to be responsible for it. Oh, this guy raised the interest rates. I couldn't get this house. Because of this guy, my job couldn't get that second loan to open up that second shop, so I had to slow down, right? So who gets the blame? The president's like, I'm not dealing with that shit. Over the while, the Turkish currency was going up, right? Because they were raising interest rates. The dollars and monies from all over the world were starting to flow in. All of a sudden, you just crash it. Well, it's not crashed yet, but where the currency is, because they're pulling it out because investors are smart. They're like, okay, there's a direct reason why this president fired this guy is because he wants to drop interest rates. So why would I risk it to stay in Turkey? I'm going to pull the money out. I'm going to go back to America. I'm going to go back to Europe. I'm going to go back to England, right? So in my opinion, I think he was doing the right thing. It's just nobody ever wants to do it the right way, do it the hard way anymore, right? Every country just wants the easiest way out, print a way out of it, get out of it, but it's going to blow up in everyone's face. In my personal, humble opinion, because I just don't see how mathematically it makes sense. Now, I could be dead wrong. And we go into a lost decade. Hell, you could call it the lost 2 decades into what Japan did and just keep printing, keep going. But then all that happens is you just have a higher division of rich people versus poor people. That's all that happens. And you get more tensions and more violence and more of what we're seeing today. I don't want to live in a society like that. Like, I want everyone to be able to be in a position to have a roof over their head, food in their belly, and have enough money in their pocket to be able to meet certain amount of needs, and still have, and you could give up some of those not needs, I should say wants, to be able to go pursue a career, right? It shouldn't be as difficult to move up in a ladder if you do the right things. But if your economic policies only reward people that already have assets, it is very hard for somebody to start from here to go to there, because as I'm saving money, you're just printing more. The money I saved isn't worth anything, and I can never save enough money to get an asset to start with. So how the hell am I ever going to move up, right? This is one of the setbacks of just printing willy-nilly and just being like, okay, I'm going to give everyone $1,400. Well, it's like, well, shit. Well, what about the $10,000 I saved? That's worth a lot less now because I'm paying a quarter more for everything in the store, right? When I go make my regular purchases, right? And that's the problem that I see here. And to me, as an investor, I'm thinking that as an alarm is like, okay, if a second world nation is scared to even raise interest rates, what the hell is going to happen if American interest rates go up, 2%? Right? Like that's in the back of my head. That's where alarm bells are singing and ringing. It's like the Fed's going to have to jump in. Okay, well, maybe the Fed does jump in. They manipulated to keep it down, but then it's like, how long could fake last? I don't know. I have a really good friend of mine that has always said, dude, the market could be a lot longer than the market could always be longer than we could stay solvent. It's not about we know it's going to happen, right? But to take these positions on, you're always bleeding cash, and the market could stay wrong for a very long time, and you could be insolvent by then. Just like The Big Short, he put that position on in 2006. The housing market didn't collapse until like 2 years later. Everyone thought he was a fool. Talk about Michael Berry until it actually happened, right? So, and then I want to wrap it up. I kind of hope that kind of made sense. I'll sum it up at the end. And then, guys, cash is not fucking trash. All right, like, stop saying that shit. Yeah, cash is trash. If you're making $2-3 million a year, yeah, cash is trash for you. Okay, it's trash for you because you have so much of it that it doesn't matter if you make a 2% return or a 1% return, because you have to put that money to work. Regular people like us, cash is always going to be king, guys. Like, in order for you to buy an apartment complex, in order for you to buy a duplex, buy a house, even buy stock, you need cash. You need a cash or a cash equivalent, right? So cash is not trash for regular people. Cash, when you hear the terms, oh, cash is trash, that's for people that are making tens of millions of dollars a year. Like, that's what pisses me off so much. It's like, if you want to go do a deal, if you want to go get in start a business, do whatever, you need cash. Right? And like, so it's like, oh, during all this turmoil, whatever, what can I do? I would stay in cash. Because what's going to happen if the stock market corrects? If the stock market corrects, it means going down 20, 30%. It's going down in American dollars. So if you kept your American dollars on the side, you are going to be able to buy more of it in the future. Like, oh, inflation's coming. Yeah. If inflation's coming, that means interest rates will have to get raised. That means there'll be a correction no matter what. And then after that, there might be a huge spike up because everyone has money. Right? So to me, it's like, and even forget the stock market. I'm just talking about just general living. You need cash to live. You need to have a decent amount of cash on hand. So when you do see a good real estate deal come up, when you do see a business opportunity come up, you could be a part of it. Right? So That's just my little rant on that. I hate when people say that because it's like, man, for average people like us, man, yeah, cash is king. It's not trash. It's frustrating. All right, so to wrap up the video again, Turkey and Russia and all those people were trying to raise their interest rates because they wanted currencies to come in and buy up their currency so they become stronger. So then when the rest of the world kind of slips into a recession, they could cut interest rates because they were already so high, and then they could kickstart their economy. No president wants to do that because that means Turkey is going to, have some pain in the short term, right? So the president decided to fire their Federal Reserve, and they want to bring interest rates back down, and that's why you've seen the currency plunge because everyone's pulling cash out. Now, long term, I don't have a crystal ball. I don't know what the hell is going to happen. The stock market could easily, the Dow Jones Industrial Average could easily go to $40,000 before it bleeds back down to 20 in the next 2 years. I don't know. All we could do is continue to take information like this and try to make the best educated decisions we possibly can. We're not guessing. We're trying to make the best educated decision. That still means you could be wrong. But my only caution to you guys would be is don't ever take on more than what you're willing to lose. And build any position you're building slowly, and you're going to be fine. Because even if you were just starting out and you had 10 grand, and you're like, man, I really love Apple at $120 right now. It's cheap. I would never advise for you to throw your whole $10,000 into Apple right away. You should always start off with like 10%. Throw $1,000 in it. Sit, watch it, see what happens, see what news comes up. Who cares if it goes to $200? If it goes to $200, you made a lot of money anyways with that $1,000. Use the rest of the money to go find something else, right? If Apple all of a sudden corrects 20% over the next 6 months and it's dropping and you're like, hey, I'm going to sit back and watch, well, now you're going to get Apple at, a lot cheaper price. So you can start building better positions there. As long as you do that, that's the number one risk management thing that you could possibly do is dollar cost average and position sizing, and building a position takes time. If you're in the market, same thing goes for real estate. If you got like, $40,000, $50,000 saved, you got time to just call and just figure out what's the best deal for you. You get the best deal possible. Then you move on it. And then it might take you another 2 years to do another deal. Hell, it might take you 2 years to do your first deal, but you're trying to get the best deal possible. There's a bunch of different philosophies with this to say, oh, just get in. You got to figure out what works for you in every single way, right? As far as interest rates go, I think we're going to over 2% on the 10-year. I'm calling it. I don't see anything stopping it. I have already trimmed my stock portfolio a lot. I'm waiting for the stimulus pop. I know everyone says, oh, it's baked in. I don't think it's baked in yet. I think over these next 2 weeks, it's going to start to get baked in. And as my stocks rise, I am going to be trimming. Because I do think we're in for a bigger reset. Now, if I'm wrong, and I'm trimming as I'm going up, and I'm just taking profits as I'm go up, I'm cool. I'm still making money. Yeah, I'm not making as much money as possible, but that's not the name of the game for me. And that shouldn't be the name of the game for you. The name of the game for you and for me should be capital protection. We don't want to lose our money. That's the number one thing. If we want to make money, it doesn't matter how much. I don't want to make millions because it's unrealistic. You can't just throw in, 10 grand, expect to be a millionaire overnight off the stock market. I mean, you could, but that's a lot of goddamn risk. That's not risk I'm willing to take, right? So for me, it's like if I got 10 grand, my goal is to grow that 10 grand to at least 12 to 13 grand. That's still a great return. That's 20, 30%. And if you could do that every year over the course of time, you're going to do really well for yourself. So that's what I'm doing is I've already trimmed a lot of my position. I kept on the positions I've had. If they dip, I buy a little bit more. I just let it ride. If they start going, then I'm going to start trimming as they go up because I just don't want to be a part of this market right now because I feel like there's too many uncertainties, not just about the interest rates, guys. We're talking about COVID and the rollout and the people and the schools and the God knows everything else is going on in this country. And there's no such thing as a perfect time to invest. That's why I am still vested. I am not just fully vested. And for me, fully vested means I got 70% of my cash in. I just don't feel comfortable having 70% of my cash in. I have about 50 in, and I plan on bringing that down to about 30 to maybe on the high end 35, but probably 30% of my cash in. And if I capture some upside, great, good for me. And if I don't, and everything bleeds down, and then we just for the next 2 years we just see a constant drop, I'll just stay in cash and I'll wait till it gets to a price point for the companies I like, and then I'll start deploying my cash. And I think I'll be better off in the very long run by following that strategy. I don't know. That's just what I think. These are just my opinions, my thoughts, my views. You got to figure out what's best for you. And if you enjoyed this video, please share it. I've been shadow banned on Instagram. As you can see, all my videos are only getting 200 views when they used to get 14, 1500, but yeah, whatever. Hope you guys enjoyed the content.